Mortgage interest rates, that is the topic for today. I love to talk about anything real estate. It is my favorite. A few Mondays ago, we talked about the housing bubble. Are we heading for one? And then we also spoke about forbearances and another one. Today, mortgage interest rates. I'm looking to buy a home. I wanted to dive deep into this to see what's happening exactly. Even though I have great resources with lenders to tell me what's going on, I definitely like to do a little digging myself to see too. I have some slides I'm going to share with you, so it just takes a second to get it set up here, and we are off and rolling. Okay, mortgage rates, the Freddie Mac 30-year fixed rate, looks like we are hovering around the 3.05% as of now. This has been in the headlines a lot lately, and again, I wanted to tell you that headlines do more to terrify than to clarify. It's not going to doomsday, I promise. Definitely, we are used to the low interest rates because it's been so amazing lately. A lot of my clients purchased or refinanced in the twos, and here we are at 3+. If you look back July 4th of last year, if you drew a line straight across, it would be the same. So we were at July 4th at 3.05%. A stronger economic data should push the benchmark 10-year US Treasury yield up to 1.9% by the end of 2021, according to the Goldman Sachs latest forecast. And why we talk about this is because this report has a lot to do with where our mortgage interest rates will fall. And the reason why things are going up, just wanted to put this out there because we're heading into a stronger economy, and with a stronger economy tends to bring higher interest rates as well. History says the last two times the 10-year Treasury was 1.9% was in 2019, and the mortgage rates those 2 weeks were hovering around 3.25%. Now, I'm not saying we're jumping to 3.25% interest rates, but I'm also saying we're probably not going to stay at a 3% either. So if you are looking to buy, now is the time. Home sellers and home buyers have gotten really used to extremely low rates. Rates even in the 3% to 3.4% range remain extremely affordable by historical standards. Now, we've talked about this before, but just to put it out there again, that as interest rates go up, the amount of home you can afford goes down. And of course, as lower interest rates are in the twos, we can afford much more expensive homes. It's clear that buyers decided to come out in January instead of waiting until spring to shop for homes. January and February of last year were our two strongest real estate months in real estate history, and we have surpassed that. Nationally, we have seen a increase in showings 55% year over year, and here leading the way out west is 90% increase. If you want to see it in a graph like this, year over year change in showing traffic, as you can see, during the pandemic, our showings dropped dramatically, and then we surged right back up with a lot of confidence in the housing market. The snapshot of the year over year changes in the key metrics. If you look at the 2% in green, I say this jokingly, that is indicating our purchase apps. We're up 2%, and I say that jokingly because there's so many of them. From last year to today, we just have a ton of them, and we're up 2% from then. In the red, you're going to see that we have not so healthy because it's for our lack of inventory, and then the 5.5% is for our new build homes. Okay, and I just love to talk real estate. So if anytime you'll have a question about real estate, please reach out to me. I'm happy to answer any of your questions. I love that you want to watch these videos and learn more about it so that you can help educate your friends and family as well. And as always, message me. I'm happy to talk to you about this privately. Have a wonderful day.